Are we live?
I would say we're live now. Welcome to another edition of the Monday weekly Market Watch show, Market Watch Weekly, on the Financial Summit channel. We are going to be going through Bitcoin short-term, long-term analysis. We've got Mike Williams here. We've got myself. Our links are, as usual, in the description. And we're going to be going through how this price action relates to some trading plan stuff, which is going to be quite exciting. So let me start off with the high time frame stuff, Mike, before we get into the shorter time frames things. And for me, I'm most interested in taking a look at the bottom of this range here, where we've got the $60,000 area of support, and just watching to see how these bounces have been coming in. You know, originally we were getting nice big bounces. They were taking the price up quickly, and they were taking the price up high. However, that has definitely dissipated. If we take a look at this move up right here, again, we've got a nice quick move up, 16 hours. It's a big move up. It goes up by 12%. But here you can see that things definitely start to change. For example, if we look at this hit and move forward about 20 hours, we're only up by 7% on this occasion here. And our bounces are not going as high, right? Previously, when we bounced off this particular area of support, we managed to set a brand new all-time high. The next time, we got close to the all-time high. This time, we can't even get above $67,000. So to me, we're just not responding to this area of support with the same level of strength. And the fact that we're already coming back down to it, you know, previously there were nice big gaps, right? We had a 14-day gap, and then we revisited it after 24 days. Now it's, you know, a 3-day gap followed by a 1-day gap followed by, you know, maybe another 2 weeks. So, you know, we're definitely revisiting this area faster. And to me, all of these signs on a longer term time frame strongly imply that, you know, we are in a more bearish situation in the market now. You know, if we come back to these levels, I'm going to, you know, really seriously question if I think that the market can hold this level or if we're actually going to be looking at collapsing. And of course, then, you know, this gets very fun because we've got very, very nice areas of support, about $10,000 lower than current price at 52K. It is granted quite light. But if we trace it back to 2021, if we look very briefly here at February 24, there is some interesting support that we can gain from here. And of course, if we look even lower, we get to the really exciting areas of support, which are, of course, a very nice 40% correction from the all-time high. So that is typically the largest correction that you will see in a bull market, which is absolutely great because it would really reset the market. There'd be a lot of panic. We'd see things reset very nicely. And I think a lot of it just depends on the support area. I think we're seeing all the right signs that the support area is going to be collapsing. That doesn't mean it has to. It is still support, and support is where you click buys. So, you know, that's still something that I wouldn't, you know, be placing bets on. But I certainly wouldn't be very confident if I was still in longs right now, put it that way. I wouldn't, you know, be expecting those longs to still make me money off these kind of areas of support. And of course, yeah, the invalidation will be 67. If we can get above 67, this is the beautiful thing. We set a major high up here at 72. And now that key level to break will be 67 because this is our recent high. That's not our local high, but it's our recent high. And so breaking this would mean that we're no longer setting lower highs. And that's obviously very, very important. What do you think about all of that, Mike?
Yeah, I agree. I'm under the impression that for me, it's essentially we're going very much sideways as well. Let me put on my chart here. In my opinion, we are just going in a sideways correction, but we do have some key levels in between, which correspond very closely to the ones that you've shown as well. I prefer to do this with volume levels. If I pull a fixed range tool from the beginning of the consolidation period to where we are at currently, then we get 3 levels. We get essentially our the light area here is called the value area, and then the mid point of that, the point where the most volume is being transacted, is called the point of control. If we simply mark out those levels, then we can see And then we can see the three levels here coming into play perfectly fine. Mind you, this value area high and low has been shifting since the weekend. So it was a little bit higher, but right now it has been shifting lower. But the more interesting part is that we got that rejection here from that point of control. Now, this is the thing. When you are trying to, essentially the value area works as follows. When you're range trading, you want to trade the bottom of the range long until it gets a full rotation back to the highs. In this case, that would be the value area high. And then you are looking for shorts, basically to trade it back down to the value area low. Now, what is different in this particular rotation here is, first of all, we've kind of dropped below that anyway, but eventually we managed to reclaim that. But this time we got rejected at that point of control. If you then start making this is what you call a partial rise, which indicates bearish price action. So the expectation from there on out should be that you're going to see lower prices. And for me, those lower prices come in, if we frame this just a little bit differently, a channel that I've already shown before, I think on this stream as well, is simply the sideways channel. And that corresponds very closely with your own levels as well, right? We have a few lows over here. We have this low over here. We have the bottom of the channel over here. And we have additional confluence there as well. If we pull a Fibonacci level, you see a few of those. Discard this one and this one, please. But if you pull a Fibonacci from this one to all-time high, then we have that really nice confluence coming in there as well. And as I've said before, also on this stream, support is simply support until it's not, right? And the fact that we have dropped down last week down and lost these lows, it means that the local market structure simply has been changing from where this local uptrend has now ended and transitioned into a downtrend. So the expectation here in terms of price action is going to be lower prices until we really reclaim $65,000. If we do so, then we can take another jab at this point of control, which is coming in really at $67,000. And to be honest, if we do attempt that level again, I think it's very likely that we're actually going to break through, because ultimately, this is also where these levels shift their function again, right? We had a partial rise. We did had that rotation. If we manage to ultimately hold this value area high, then and we reclaim this $65,000, then the expectation changes once again for that full rotation to the upper end of that value area. And the reason why I'm talking about this now is because of the fact that these value areas have changed over the weekend. And so that is like fresh and new price action. So that is what I think on the midterm time frame. If you want, I can also go a little bit more into the lower time frames as to how we digest the local price action. Or do you have something to add on the stuff that I just mentioned?
Only that it's always poetic to me how you can use completely different tools and approaches and then arrive at similar conclusions with analysis.
Yeah.
And
Exactly.
and I always find it very funny when people say TA is just luck or it doesn't work and things like that. It's just code for saying I'm bad at doing TA. I'm bad at drawing lines on a piece of paper, basically. And yeah, this is obviously proof that that can't be the case, because we've used very different methodologies and said almost the same thing. So
Yeah.
super cool. But yeah, please dive into the short term stuff. I'm very curious.
Yeah, and one thing I do want to say about technical analysis, there's a lot of people saying that technical analysis doesn't work, but it depends how you want to use it. For me, I use technical analysis to identify levels on the chart where I am interested in maybe taking action. Right? If you're trading, let's say, in a place where I don't find any good technical analysis levels, then I simply do nothing and I wait until price gets to a level of interest, and that is where I'm starting to execute my trades, which
It's
also
literally 99% of my life. Yeah, it's
yeah,
all
yeah,
I do. Just wait for a level I like, and I've already got a plan when we get there anyway.
exactly. And that is the function of technical analysis. It doesn't magically, make you rich overnight or something like that. If you're good in technical analysis, it gives you like technical analysis is supposed to give you confidence in order to take trades. But taking trades and being in a trade is not the same as analyzing a chart at all. That's my opinion. Um, but it should give a good guideline. Well, when it comes to local analysis, and this is where for me technical analysis really becomes important, because it shifts probabilities back and forth. Right now the probability is very high that we're going to see lower prices. However, if we breach specific levels, then the probability shifts against that, and then a rise in price becomes more favorable. And the way that I do that
I
in
just just one sec. I really want people to appreciate the nuance of what you just said, because to you say that casually, but that is so important for people to understand that you are generally like, if you're bearish because the markets are showing you that you should drop right now, you're going to ease on that bearish stance the more we drop, because you're going to start getting more reasons to be bullish the deeper the price corrects.
Yeah, exactly. And yeah, you're going to be interested in what I have to show next, because that is exactly what happened here today. So what I look at locally right now is we are locally basically downward sloping. This is also a range bound environment. However, this is not a trend that is going down, but this is a range that goes down. I have a lot of reasons for it. We can get into it, but then we'll probably sit here tomorrow. As you will watch this show more often and often, you will most likely learn a thing or two about it, or you can you can join Thrive Labs, which is where you can learn all of this anyway. Just a quick hook into that. But basically the way that I'm seeing this is, this at the moment is a downwards sloping range. I do expect a reversal at some point. However, the way that I look at this right now is starting from this big channel. What we can do, this is the big range, and we are currently also having a range in that lower section of that. What we can also do after that is refine it further by simply diving into the more local time frames, such as, okay, where are we then within this section? And the way that I look at that is as follows. I simply have a downward sloping channel where I expect a rise in price at the lows, but I don't expect a breach through, as in reclaiming those highs. If it does, then that indicates a sign of strength for me, and I expect higher prices, and we can actually start to see further progression, for example, back to that midline of the channel. Now, I like to combine these kind of things also with some horizontal levels, where I take these levels from daily closes, right? Daily candle closes, and I mark them out. And we can see here, we have that daily over here. We have that daily over here lining up very nicely with the bottom of the channel. And then we have that midline of the channel as well, giving a little bit of leeway for a potential fake out if that happens, which can present us for some really nice day trading opportunities over here. And coming back to what you said, today we have been, again, you can refine this as much as you want. You can go all the way from investing to swing trading, to day trading, to scalp trading, until you're essentially fighting against the algorithms, essentially. So we can zoom down even further into a time frame, and this is the situation today. We have been going very much sideways for an extended period of time, and that's where I want to tie in into what you just said, is if price is dropping, a lot of people tend to really get bearish, and a lot of people tend to trade breakouts only for that. But you have to realize that if you are shorting into support, then the bigger pockets that are trading the other way are using you as liquidity, essentially. That is the basic theory about liquidity. And I'm not saying this just out of nowhere. I can actually prove this if we look at order flow software, which is software that I use in order to get my actual trading entries. To dumb it down, basically what I can see here is the order flow. I can see how many people are shorting and how many traders are taking longs. And as we are dropping here, let me just really simplify this just to make this, really dumb this down. This is the amount of shorts that have opened. And just take a quick look at where do these shorts come in. Exactly at these lows, right?
Buy low, sell high, bro. That's the
Sorry?
name of the game.
Yeah,
I'm sorry, buy high and sell low.
yeah.
That's the name of the game.
Exactly. Buy high and sell low. Exactly. And that is exactly what happened. We had this somewhat unexpected drop, not for me though, but for a lot of people, as this is just those are the facts. There's not beating around the bush here. The opinion doesn't matter. This is actually what happened. So we drop down here. We have that really little retracement, and once we start dropping again, look at this increase in shorts. And we're not talking about just a few hundred shorts. we can also see exactly how much shorts actually have opened up here, right? We we have a lot of selling pressure in here. We have about 5 to 6 million shorts coming in here, and that gives that liquidity for that squeeze to the upside into the New York Open session, bringing us up where we are at currently right now. And that is the situation currently, and this is the exact this is wow, struggling with my English here. This is exactly the situation in on smaller scale. What I will be looking for if and when we start dropping into these lows over here. That is what I want to see, but then basically magnified by, let's say, 1,000 times. If I see that, that's going to be a long trade for me.
You want to see a lot of shorts coming in at the lows, basically translating into a lot of panic right at the support.
Precisely. And
Yeah.
what would be even better with modern Bitcoin nowadays, what also happens a lot, we drop down, we stay here for a few days.
Can we just move the chart because your head is
Oh,
covering
sorry.
the
Yeah, yeah, yeah.
drawing?
What is happening in modern Bitcoin nowadays is this happens, and then we are below. A lot of people are classing this correctly by that time that we have lost support, only for tons and tons and tons and tons of shorts to come in, only to just when nobody expected, boom, reclaim that range and then start the reversal. That's going to be an ideal situation. If you know how to trade, it's going to be a golden opportunity. And if that doesn't
Deviations
happen,
are Bitcoin's love language. But how do you know? Just before you tell us what happens if that doesn't take place, how do you know when we're trading sideways that this is a deviation swing failure pattern and you're actually going to come back up? How can you tell?
again, well, yeah, well, I can't tell in advance. That's real time data that comes in at the very moment, right? So that's why you need to know what to look for and simply make it's part of a system that you've designed as a trader. If you want to be consistently profitable, you need to just have a system. You need to have studied this concept, and it's just a matter of ticking a few boxes, or actually a lot of boxes. And once they are all true, that's just simply a trade setup. And
So you wait for your conditions to be met, and if it all looks good, then it's just a trade, and you're not attached to the outcome.
exactly. I know my risk, so and before I put the trade on, I'm already accepting the fact that I basically lost the money. And then if the trade does play out, well, that's when I can eat a nice dinner, essentially.
Yeah.
And that's how I go about it. And this is a little bit counterintuitive if you're a human trader, if you're a discretionary trader, because this is usually the point where a lot of people are panicking. Or if you do have that plan, you do have the correct analysis, and then when price actually reaches your level of interest, you start second guessing your plan, right? And that is also how a lot of people simply miss moves. And that's why I need a system, in my opinion.
That's why you need solid rules, bro. We were talking about this off camera quite a bit when you came out here, but having a solid set of rules and then actually sticking to them when the market moves, and not allowing your emotions to control you at that time. That's honestly like learning the ABCs of how to trade, how to do analysis, and all of this stuff that we're talking about is the easiest part. But sticking to your shit when you're supposed to is the thing that, like, I don't care if you've been trading for 1 year or 10 years, it's still the same battle that you're going to keep facing the whole time.
Yeah. And it's never going to stop. I mean, I'm trading now for a good 7 years, like profitably. And because I'm human, I still have periods in time where I'm struggling with this kind of stuff, where just, the human emotion does get into my head. But because I have a system, I've learned to rely on that. And despite sometimes I do lack, well, not necessarily confidence, but I'm like, am I doing actually the right thing? Then I just look at my system, and my system says, like, yeah, this is a trade, Mike. So go for it. And that's just a matter of just taking the trade, believe in your plan and your system that has already been profitable over an extended period of time, and then it's just a matter of either you win or lose, and you make sure that you win more than that you lose. That's
Yeah.
the trick.
Or that you win larger amounts than you lose, because it's also fine to have a less than 50% success rate, but
Yeah,
you're
100%.
trading at 4-to-1 risk to reward for every trade.
Yeah.
It's going to be okay.
Exactly. I mean, in the end, when it comes about results, it's all about mathematics. I definitely think that around the internet you see a lot of noise going around. You only see people in mad profits every single day. But you don't need, if you have a good system, you don't need to win every single trade.
Absolutely.
And the numbers
So,
speak for
Mike,
themselves.
tell us a little bit about what happens if we don't fulfill that deviation that you were just describing, and then I want to switch focus onto some traditional finance and get your take on that as well.
Sure. So basically, if I don't see these kind of things, so either I would like to, I think this can play out for the long trade, for this support to hold. I think it can play out in a variety of ways. Honestly, one, let me just clean up all this mess because that's a little bit tricky. Let me just put on this nice, nice, serene, tranquil chart over here. I think what can happen is, because a lot of people, I do have the feeling that a lot of people are watching this level. So either we're going to have this massive drop and then also a very quick recovery, which is going to make for a difficult trade, to be fair. That is an option. Or we we just do it very classically. We just do this. That would be the perfect scenario. Or we drop below, we stay here and come back, and there you have multiple opportunities actually. So to answer a little bit your question, what you asked before, like how do I know? Well, because I'm a day trader as well, I can also simply just trade this local price action, and based off of that, always keeping in mind the larger narrative. When I take like a lower time frame trade, being aware of what is happening in the bigger picture, I will be aware that there's a potential major opportunity there as well. So instead of maybe closing my day trade, I might just keep it open and carry it over towards a larger time frame trade, for example. Or if we don't get any of that, let's say if we do drop down and we don't have a lots of shorts coming in, for example, and it just looks like it's really bearish by that point, then I always have the choice to stay out. You can always do three things in trading, which is long, short, or do nothing, right? And honestly, trading is 80% of the time you're basically doing nothing.
But you wouldn't go short here.
Sorry, what?
You wouldn't go short.
No, because that for me would be a breakout trade. So instead, I
Yeah.
would wait for lower prices and look for the long. Only, let's
Yep.
say if we do this now, in this case, we are at all-time high. So I'm going to be very cautious shorting all-time highs. But what I would normally do, for me, when price rises, I look for shorts. When price drops, I look for longs, and that's it. I refuse to chase these trades because for me that's
Yep.
chasing. But that's personal. It's my strategy. I do know people that trade breakouts. I don't do it because it hasn't really worked out for me.
Yeah, I'm the same. I'm looking at a similar setup, and I've got literally my rule set says do not take breakout trades. They just don't work anymore. You mentioned with modern Bitcoin, these things don't work anymore, and that's bang on correct in my experience as well. Modern Bitcoin will take you down here, make you think we're dropping down to hell, and then come back up like nothing happened.
Yeah.
And you're just going to feel like an idiot for selling down here. So it's the same reason I wouldn't take that trade. What I'm looking at and what I would love to trade is actually a your scenario too, which you mentioned is just a straight collapse down. I'd love to see the retest and then consider. I'm not saying I would, and like you are going to watch how things play out and trade based off that. I would of course do the same. But if we do manage to get back up to this level, depending on a few different factors, like number one, how low did we fall? Number two, how long does it take to get back up to this level? Number three, are we starting to develop EMA resistance coming down? Is there some other important indicator that I like to watch, which is offering resistance? Is there a value area low? For example, with the fixed range volume profile, is there a Fibonacci level? Yes to these questions, by the way. There would be a yes to all of these questions. If we wait long enough. And so if I start to see that there's a lot of confluence there, then to me that's a really interesting short, because I'm not shorting the all-time high, just like you said, Mike. I wouldn't want to do that either. I don't want to stand in front of a moving train, but I'm a fair bit more and by the way, I don't like shorting in general. It's a lot easier to make money going long than it is to go short. So to me, the correct trade would be buying support, whether it's down at 52 or down here at 44, for example, or 48 in the middle. Those to me would be the much better trades to take. But if I was curious for a short, this is the setup that I would be looking for personally. And I wouldn't necessarily, fade that all-time high break. I think that if we manage to reclaim the 67K area, we're getting right back up to the top of the range. And if we get back to the top of the range within a bull market at an all-time high after 60 days of consolidation, because it has now been 60 days we've spent here, to me, that's exactly the kind of setup you would expect before a major breakout. So definitely not something that I would be interested in selling at that point. Like I said, I do want to take a quick look at traditional finance. I'm going to start off with the S&P 500 and ask you for your thoughts as well. Also want to look at the dollar in just a sec. We've seen a nice big recovery for the S&P 500 here, up by 3.3%. I'd love to see it continue to drop. This is the largest correction that the S&P 500 has initiated since it started this correction in July of last year. This correction took the S&P 500 down by 10.7%. Between this correction and now, the largest kind of corrections we've seen have been about 2.7%, nothing particularly higher than that. So we've definitely started a nice bigger one now. This one stretches down by about 6%. I'd love to see it come back down to this yellow line, which marks the previous all-time high back in December of 2021. It would be beautiful to tag this level and then continue up. And I think the fact that we're already starting to see a recovery here, really allows this to be your typical A, B, and then potential C wave over here. So that's something that I'd be looking for. Just especially now that we're starting to form this recovery. I mean, if this can come back up to our previous area of support, for example, and we can come up and tag this level and come back down, that would be cool. We don't have to. The levels are not amazingly defined on the S&P 500. Honestly, I think this would be enough, to justify the S&P to start dropping. But that's something interesting. And if we take a look at the dollar, dollar's just kind of cooling off. This one's been a controversial one to analyze. A lot of people seem to think that the dollar is done. I don't know, but I don't necessarily think it looks super weak right now. I don't want to get into the trap of analyzing the dollar like it's a stock or like it's a crypto coin, because it's not either of those things. But at the same time, it's not looking horrible to me just from this chart. Previously, and it's the same thing I've said before. When you do indeed get rejected from levels, you tend to get rejected pretty quickly. Rejections happen quick; they happen fiercely. On this occasion here, we're just, we haven't dropped by much since we got up to this resistance area. Certainly not like before. Before we won't even spend a day around this level. Then of course we had a small breakout here, and I think we're seeing the same kind of body language here with this market. I'm sorry, with this chart, which is simply that we're getting very comfortable at these resistance levels. We're not really dropping too hard too quick. So that's something which I think is important. What do you think, Mike? Any thoughts on all that?
Well, I very much agree actually with you. I don't really have that much to add, honestly. What I will add is we cannot forget that the S&P 500. So this is the ES. This is the futures chart on the ES minis. Exactly the same, but well, a lot less gaps because it's open a lot more often. Anyway, we've seen a rise in price, or basically without any real good retracement. You really need to, like, be educated about reading market structure, price action, and all that. And if you can see some mini consolidations over here, right? But this is really the first very much big one that we're getting right now, and it happened to be in this little consolidation area that provided us with support, and we are currently bouncing from it. I do agree with you. It's about time and more healthy to have that consolidation on the ES or the S&P 500 rather than just only up, because that would, I think, if you don't do that, then you can quickly accelerate into a major bubble, euphoria bubble, where if that pops, there's so little support that you're going to drop down heavily, essentially.
Yep.
And the dollar, exactly the same. Like, for me, the dollar is completely like not special at the moment. Of course, we have like all this fundamental talk about how the dollar is going to fail, and to some degree I do agree with that, but I don't really see that happening tomorrow or whatever. So for trading, to make trading decisions based off of, and to judge the health of the market overall, I don't think that's a good narrative that I'm very interested in. For me, dollar is literally just going sideways. mentioned this, I think, a couple of times already. I don't remember where, but I've definitely mentioned this a couple of times. So the dollar is just like doing nothing since 2023. Really, of course, we see big rises and we see big drops, right? And for example, these ones, they do result in an overarching trend going on carrying over to the traditional markets and crypto as well. But honestly, the correlation and the inverse correlation is really not that strong at the moment, and that is due to the fact that we're simply just also consolidating on the dollar. So we have those rotations there as well, but they don't impact the other assets as much. And especially doesn't help at the moment when it comes to day trading, as opposed to 2020, 2021. You know, when you saw New York open strong, right? You could literally basically just take along on Bitcoin on the day and expect higher prices because that was just pretty much a given. Those days have gone right now. Maybe they come back later on, but they don't affect each other that much at the moment. It might come back later, but at the moment, dollar is a little bit very neutral, in my opinion.
Cool. Sounds good, bro. I think we've covered a good amount in this show. Let's call it for this one.
Heavy
And
analysis day.
yeah, good analysis covered here. Very good lessons as well. As usual, ladies and gents, if you want to find our YouTube channels, you can do that with the links in the description. Mine is Sami Loyal Forflies. Mike William, what's yours?
Mike Williams Trades is my YouTube channel. I also do a
There you
show
go.
there every day. So feel free to join up there every day at noon, Central Eastern
Perfect.
European time. So see you there, hopefully.
All right. Sounds good. Thank you all very much for tuning in, and we'll see you next week on Monday. Cheers.
All right. Cheers, everybody. Bye.